Welcome to the Giving Room with Dave and David, where we encourage remarkable generosity, from amazing stories to easy to understand discussions about tools for giving that may just be right for you.
Hey, I'm Dave.
I'm David.
And today we have a really fun tool for giving for you. We're going to be diving into what's called a donor advised fund, or kind of like a charitable bank account for you.
And almost like a charitable checkbook.
It's
a bad metaphor, but it works.
And we're going to be kind of talking about like, what is it? Who's it for? How does it work? And to do that, we brought in a special guest today. We have Chris Lightfoot here from the National Christian Foundation.
Thanks, guys. Good to be with you.
And so we're really excited to dive into this. And so as we get ready, so pull up a chair. Welcome to the Giving Room. Here we go.
Yeah, we are excited to talk about this. You know, one of the things we do, sort of inspirational stories, things that would motivate people to give. And, you know, we're kind of the whole idea is we want to encourage remarkable generosity. Donor advised funds are a tool for giving, because we talk about tools for giving, like what are the different ways that we can accomplish that?
Yeah. Mm-hmm.
So the heart is, what causes us to do these things, but then how do we do some of them is what we like to talk about. So that's why you're here today. You're going to help us unpack this donor advised fund. But before we get there, tell everybody who you are, what do you do, and we'll.
Yeah. Thanks for the intro. Appreciate that. So Chris Lightfoot, I'm a relationship manager with National Christian Foundation here in Ohio. We've served givers all over the country, but our primary focus is here in the Ohio area. And we get to have these conversations all the time. I think what's really fun about the conversations we get to have is most people have some sort of a financial strategy, but helping them discover and implement a giving strategy that maybe they've never thought about, maybe their other advisors have never talked to them about, really opens their eyes to, okay, how do we leverage some of these tools like a donor advised fund to increase our own capacity for giving? So excited for the conversation today. Thanks for having me.
And you mentioned this, and I think we're going to have another conversation about National Christian Foundation generally, but based where? National Christian Foundation.
Yeah, home office is in Atlanta, Georgia. 39 offices around the country. Yeah, yep. So we are one of the affiliate offices that represents the larger entity of National Christian Foundation here locally.
Well, we'll save the rest of that for later, because it'll be fun to sort of unpack the whole thing. We want to know the heart and the history of NCF. But today, back to just donor advised funds.
So I mean, obviously, there's all kinds of tools for giving, right? And the NCF can help you with a whole bunch of them. But we're going to kind of laser focus a little bit in one specific one. And so first, Chris, would you mind just kind of giving us a quick overview? What is a donor advised fund?
Yeah, I mean, you guys have already used the vernacular that we use most often, which is the charitable checkbook or the charitable checking account. And it's just relatable. People understand when you think donor advised fund, the IRS technical language and getting behind that. And it's a 501c3 entity that people can use to give things, not just cash, but assets into and get a tax deduct. That's all great. But at the end of the day, it's a charitable checkbook to enhance your giving experience. For some people, consolidate, simplify their giving experience. For other people, leverage things that they didn't know they could maybe leverage through that tool. But it's just a tool that the IRS has approved to act on behalf of the donor and support the giving that they want to do charitably. So
unpack that a little bit more. What are some scenarios where that makes sense? Like why, I give a little bit to charity, for example. Should I get a donor advised fund? Am I the right guy for that?
Yeah. Who's a great prospect?
That's a great question. And, we really see the spectrum. I think we see people who want to use a donor advised fund for some cash strategies that they want to implement. If they want to bunch up a couple years worth of charitable giving goal years and then get one deduction for that in the year in which they make that gift, but then slowly give out of their donor advised fund over the next couple years. It's a wonderful tool for that. But we also see people who just want to simplify, as I said, and they say, man, I'm chasing tax receipts and gift receipts from all these different entities that I give to throughout the year. And if I could just get one tax statement at the end of the year from my donor advised fund, that would simplify my life so much. All the way to then the business owner who says, I want to leverage my S Corp interest in my company. How do I unlock that? Well, your donor advised advised fund is a great tool to be able to gift that interest into, and then either hold the company and share the profits to the donor advised fund, or wait until a sale and recognize the proceeds into the fund. And then even things like real estate and gifting literal interest, or not interest, but gifting the real estate into the donor advised fund is a wonderful leverage of that tool. So a lot of things that we could get into. I don't know how deep down that rabbit hole we want to go, but
can I summarize this? So it sounds like there's some timing advantages, and we may unpack those more. I was sort of, my restless night last night was like, should we talk about bunching today? That's a little technical, and like it just sounds weird, right? Bunching sounds weird. I think we will, so we'll just sort of put a pin in that. We may talk about bunching at the end, because there is a tax advantage to that as well as a timing thing. So maybe we'll talk about that.
Yeah.
But so there's a timing thing. It sounds like there's a simplification thing, right? So this is a way that I can simplify. You mentioned, chasing down tax receipts, and I don't really do that. That's because the donor gets the deduction when they create the donor advised fund, right? When it's funded.
There you go.
So when that asset goes in, whether that's cash or property or whatever it is, we can maybe unpack some more of those things. That's when that's the taxable event. So there's one receipt, or for however many gifts you made, but it's coming from one entity.
Exactly.
And then you've got time on the other side, right? You can distribute over time. So it could be, the same time you fund the fund, or it could be next year or the year after. It could be whenever, when you actually suggest grants back, and we'll talk about that.
Can I jump in just real quick? There's a lot of technical words I've heard, and you simplified it. I want to simplify it further. Tell me if I'm wrong here, right? But essentially, I can essentially make a donation now, and then later redonate it from the place I made the donation to. That's essentially, that's why it's a donation checkbook. I have the privilege of later telling that charity to send a gift to another charity. That's a kind of a step process. And so some examples of some people I know who've used this, right? Is I get a big Christmas bonus on December 15th, and I have 15 days to figure out where to send that money in order for it to count on my taxes this year. Or I can donate it to the National Christian Foundation and next year redonate it somewhere else. It allows me to not have to decide in the 2 weeks before December 31st where that money has to go.
Right. Now you're giving like lawyers and tax accountants like a lot of heartburn when you say redonate it.
Yes,
right. Like
that is correct. I was trying not to cringe on camera.
So we're not saying that. It's one gift, but then it sits
None of
there.
That can be used legally,
right? And then
to the average person who's giving, that's what they feel like they're doing. I realize there's a lot of paperwork and logistics.
It is simple though.
It's the privilege of encouraging them to pass that fund on. Is that a better way to say that? Maybe.
No, I mean, it's
sort of.
Well, let's talk about that. So really, it's this charitable checkbook idea, that metaphor. The only difference means like you don't actually own it at that point. You're the only thing you own, and that's in air quotes. If you're listening on the podcast, the only thing you own is the right, and that's actually in air quotes, to suggest where those gifts go, right? So I made the gift to my donor advised fund, and we'll talk about all the places you can do that in a second. But then I can suggest later that the gift ultimately goes.
The privilege of making a suggestion as to where that money could go.
You give us a great example. So like if you get a windfall, and sometimes that's a bonus, and sometimes it is the sale of a business. It can be a lot of different things. Yeah. And you do have the ability to put it in one place and then distribute from that. And it simplifies that work. That's like one of the great things, right?
Yes.
And that prompts one of the other questions. Like, I can do this during my lifetime, but could I do this? Could I add to my donor advised fund, like even later, like through my will and trust? And then what happens to that if I'm not around? Like, is it a vehicle that helps there? Or
Yeah, great question. In fact, I was just getting off the phone with an advisor right before we stepped into the room here today. And we were talking about succession plans on a donor advised fund. And what does that look like? And how do you set that up? And you can set up testamentary language in your estate documents or on your accounts.
So this is in our will or our trust or there's an agreement that says payable upon death.
There you go.
To XYZ.
Yep. Transfer on death, the beneficiary on the 401k or the IRA, right? And name the donor advised fund. Now, part of the strategic play there is what assets are better to leave to charity and what assets are better to leave to your kids. I don't know if we're going to get into all that today, but yes, you can.
We've done some of that in the past.
Okay, great. Yeah. So setting some of that up, allowing the donor advised fund to receive some of those. And then as a part of the succession plan, do you want to leave charity in charge of distributing that based on your wishes? Or do you want to put your kids in charge of distributing that based on what mom and dad would have wanted. There's a lot of different directions you can go on the succession plan piece.
Yeah. So it actually does have a way that you can involve your family, and that could be both now and later, right? Like you can involve your family now. And that may be fun to talk about.
When I dove in and was causing everyone heartburn on these kind of the ideas of regifting, right? But to your point, there's a reason why that's really, really important. Because it is a privilege or an option, it's not a guarantee. And that's part of why the donor advised fund you choose matters. Where you store your money matters for this purpose, or where you give that money, because you're not storing your money; it's no longer yours once you gift it.
Right.
So, what are explain a little bit more about it too? Like, yes, it's a privilege. How does that work?
Well, let's talk about this. That's a good place to go. But I think we need to talk about all the different places, the different charities that offer donor advised funds. So we've obviously mentioned National Christian Foundation, and maybe the fact that Chris is here shows some bias that we that we have, right? So one of our favorite options is here, and we'll talk more again in a later episode about National Christian Foundation, just to introduce that whole thing. But so NCF is one. There's sort of an organization that's been closely related to NCF historically that's called the Signatory, right? Yep. You can do it there. So this Signatory is an option. Very similar from a worldview and values place. And then other options,
Waterstone is another option that would be similar to NCF Signatory in terms of, I think it's maybe good just to clarify that the donor advised fund is just a tool. Really, Schwab Charitable, Fidelity Charitable, Columbus Foundation here locally, Dayton Foundation, other local community found. The donor advised fund is the donor advised fund is the donor advised fund. Like any tool, how you use it and who you're working with makes a big difference. And so, NCF bias here again. There's the values alignment that you get with an NCF or a Signatory that is pretty important compared to maybe some of the institutional or local community foundation
so
pieces.
If you're a person of faith and consider yourself a Christian, it's something to think about. Like, who am I going to be partnered with for this significant thing of giving? And maybe we can unpack that in a minute. But so those options, we mentioned some of those other options. You alluded to Dayton. You didn't allude. Dayton Foundation, Columbus Foundation. Those are community foundations.
Correct.
So some of the folks that are listening or watching may not know. So community foundations are kind of what they sound like. They tend to be endowments that were created historically for the good of the community broadly, and they tended to be geographically focused, right? So that's sort of the culture there. And they're actually who pioneered donor advised funds. The community foundation world who started that thing. And then in addition to the Christian versions that are out there, like that we just talked about, we also have even universities are doing that. So it's like you said, the tool is the tool is the tool. So we could go down the street. I think Ohio State has donor advised funds as well. And Michigan, if we have to, maybe, and other places. So that's probably, wherever your alma mater may do that.
You're right.
There's lots of other organizations. And then as you mentioned, what I would consider commercial gift funds. So like Fidelity, Schwab, kind of brokerage. Have their own too. So the Fidelity Gift Fund is a thing. The Schwab Charitable Fund is a thing. So just through them, you can actually set up your own and kind of have that, just the financial services back office. Straight that. But the values alignment, why would that be important? Is there any examples?
A number. So even we think about values alignment from a few different perspectives. Obviously the granting, and maybe we'll get into some of what we're seeing societally and culturally with grants and who the restriction on the grants, because as you mentioned, David, once it's been gifted, part of the reason you get a tax deduction is the IRS says you no longer own it, you no longer control it, right? You're an advisor on that fund, donor advised fund, but you're no longer the owner, and you're getting a deduction for giving up that ownership and that control, which is great. But you just got to be aware of who are you turning that ownership and control over to. That's important. But I think some of the other things that we see that people really resonate with on the faith-based side is just getting connected into a community of like-minded givers that are all doing this together. That's a big deal. In some ways, the community foundation fosters some of that. Maybe not as much as the faith-based community foundations, like a local NCF or like a Signatory. There's a tight bond between people that come together around this idea of generosity that is really inspiring. The other examples that you see in that community are inspiring, the stories that come out of that. So some of those pieces of being a part of that, in addition to the values alignment piece on the legal side, are pretty powerful.
Yeah. So, and this is maybe the next step in that conversation. So because it's not yours, you're advising, that means that whoever you are partnered with, whether it's local community foundation or your alma mater or whoever, could say no, right? Like, because you're just advising.
Correct.
You don't know,
Right.
you can't force them to make the gift.
Yep.
So it's possible that they would say, no, that's a little
Right.
too evangelical. There's too much evangelism going there. That's not something we're going to do, or
Yep.
or while that Christian school doesn't maybe line up with the cultural moment, so
Yep.
that's not going to be a place that your grant would go.
Yeah, and we have started seeing more and more of that. And I don't know how much time we want to dedicate to this, but I think it's really important for people to be aware of the fact that this is no longer just theoretical. We are on a regular basis now seeing grants denied to faith-based organizations by both the institutional and the local community foundations. And to be totally fair, I think that's part of what Christian givers like about associating with a Christian organization like NCF is we're also going to restrict some of that granting, but in a way that they view as protecting the values that they align with. So if there's an organization that they may not necessarily be aware is engaging in certain activities that they would not want to support, well, an organization like NCF is going to do some vetting and say, hey, you know what? We're not going to send grant dollars to that organization for this reason, or this reason. And a lot of times the giver says, thank you. We had no idea.
I had no idea that was even,
yeah, yeah. So,
Well, and I think to dive into that, for example, when you put your money in a bank, right, that bank grants loans within specific contexts to help local businesses, different homeowners. Like the same is true in too. Like there's investments being made by these donor advised funds, and NCF is not only allowing you to tell where to grant, but it's also making grants, right? And so is that correct?
With other funds, not out of your
But,
donor advised
investments
fund,
of those funds and things like that. So, for example, if I invested in the Columbus Foundation for my donor advised fund, the Columbus Foundation is also using the return on that to make investments in the local community.
Oh, that's
the same would be true of if I invest in the National Christian Foundation. The National Christian Foundation is making investments of their own out of that into Christian causes.
Great clarification there, Dave, because there is a differentiator there that's maybe an important distinction to draw. So National Christian Foundation actually does not have any pool in which we have our own dollars.
Really? Okay.
So we don't have any discretionary granting that happens at National Christian. It's just donor advised funds. 100% every grant that goes out the door is recommended by one of our donors. So that is a differentiation from like a Columbus Foundation, where a part of the dollars that are either return on investment or they have a pool where Columbus Foundation says, hey, we have discretionary authority over these dollars. We're going to grant those dollars where we want. And it may or may not be something that you want to be a part of.
I'm learning something new.
Well, the clarification. So you mentioned like from the investment pool. So even in the community foundation context, the growth of your fund is your funds, right?
Right.
But there's administrative fees, even in the context of NCF.
Right.
There's a competitive sort of market-driven fee that if you looked at the fees, which are online, they're very similar to what community foundations and others have. And that administrative fee is doing exactly what you said. Like it's going into further all of the things.
Yeah.
And a lot of times, depending on the context, all of the things may not be things you line up with, right? Like there may be things on that list that you're like, I'd rather not be having even the administrative fees off of my fund going to further that. So it's just something to think about.
That's an interesting point, David. We had another conversation actually just today with another advisor, and he said, hey, we've got a client who really doesn't like the fact that they're having to pay some fees to their institutional, I won't mention the name, but to their institutional DAF provider because they want more of
and
those
DAF is
dollars.
Donor Advised Fund. Just
Donor Advised Fund.
Right.
Thank you. Because they want those, they would rather see the fees go to the ministries that they want to support or the charities that they want to support. But he said, even though NCF might be a little more expensive than this institutional, he might want to switch to you guys because then 100% of his fees are going to a ministry that he likes. He's been to some of our events. He knows what we do in the area. So it's a great point because those admin fees that are coming in, what is that going to support? Is it going to support the ministry of the donor advised fund that you're aligned with, or is it going to support the institution?
And in the context of NCF and Signatory and all the ones we mentioned in the faith space, that's going to allow you to be this free of charge resource, right? Like you can run around and actually help people accomplish what God's laid on their heart. And there's no, they don't get a bill for that, right? Like, so that's definitely something to think about. I think, the discretionary grant making is one thing, and you definitely are kind of in that world in the secular space. But in your case, it is funding ministry. So those fees aren't just, banking type fees. They're actually going straight back into ministry. So folks like you and all of the yous across the country can do the work of, sitting down with somebody and they're not on the clock, and you can even sit down with their professional advisors who may have them on the clock, may or may not. But you're serving all of them, right? And you're sort of like shepherding that charitable intent or whatever it is that God's leading them to do, and you're just this trained expert resource that happens to be free, which is rare. So it's a good thing.
And that's maybe a great transition. We've been talking about the tool. Some of that has been more tactic strategical, but for the Christian organizations, because they're ministry focused, a lot of that is heart, right? The above the shoulder, below the shoulder. Yes, we need the tactics and the strategies, and we want to implement those shrewdly with wisdom. We want to do a good job of stewarding what God has entrusted to us. But there's also a component of the values alignment is the starting point for the heart piece that says, hey, there's an opportunity here to educate, to equip, to disciple the people of God, the ecclesia, the church, to really lean into the generosity that God has called us to. And that's the ministry work that we love doing. It's, yes, the transaction piece is a part of that, right? We are here to mobilize the resources, but we do that by inspiring biblical generosity. And that educate, equip, disciple, let's go inspire biblical generosity. Man, that's the ministry work that we love to do. So
and that's consistent. I mean, that's why you're here. I mean, obviously, other than our admitted bias already, but we've said, the encouraging of remarkable generosity, that's sort of one of our things. And then making sure that generosity then is intentional and spiritual and cheerful is like part of that, right? So just what's some of the theology that sort of underpins how we're supposed to approach this. And then our audience is definitely gonna be familiar. We talk about sort of Paul's challenge to the Philippians all the time, right? Like, so it's not that I seek the gift, but I seek the profit, which is to your account. So, and I see that that's in your role, right? Like you're not there, necessarily for that earthly above the shoulder piece. It's really like what's going to happen, from the heart. And then actually, how's that going to credit, from a kingdom perspective for eternity. So,
but doing it well is going to be a larger credit from a kingdom perspective for eternity, right? So if you are a good steward, if I even go back to thinking about the parable of the minas or the parable of the talents, there's a space here in which we're called to be really good stewards with what we've been entrusted, and make good decisions, avoid mistakes. Let's implement some guidance and strategy and solutions that will help you accomplish what God has called you to accomplish with what He's entrusted to you.
Awesome.
Yeah.
Well, just to kind of to wrap things up, unless you have one more thing. It looks like you had.
I was just going to do a couple, just kind of, I don't know, almost like the barnyard of some rules around these things. So this is just questions I've heard in the past, and I thought, if we could address them here, then someone else doesn't have to address them later, right?
Yeah,
so if I do open a donor advised fund and I understand all these things, whether it's a windfall or I even just time my giving into it so they can time my giving out of it. So can I pay for like my granddaughter's tuition at the Christian school? Because the Christian school is a charity. Like, does it work that way or does it not?
You have to be really careful about excess benefit and any type of personal benefit to you or related parties is the IRS terminology, up or down the family tree. So you could put money into that scholarship fund at that Christian school. They're not going to allow you to name your granddaughter and cover her tuition.
Right. And it's, I think as you process through that, the answer becomes obvious. But I think sometimes everybody's like, wow, this is like a way I could do like both of those things. I'm like, you can't really do both of those things, And you probably don't actually want to do both of those things if you think through it and like kind of, figure it out. I did want to share, I don't know if you've seen this, one of the sort of funnest things I've done in that grandchild space. I actually had somebody who had worked with, they had a larger donor advised fund, and then they actually would spin off or add to a new fund every time a grandchild was born. Mm-hmm. They would open a fund in the name of this grandchild who wouldn't even know that they had a fund until they were like 21 or something. I forget what, we sort of have a memo of understanding with the foundation. So they actually put, like whatever the fund minimum was in the donor advised fund every time a grandchild was born. And I thought that's just like a super cool thing. So that's not, wealth transfer or anything like that, but it is this, we're going to start this culture of giving before you can walk. So we've created this platform, this vehicle, and that's just going to grow. And there's going to be the ability.
We love to talk about generational generosity, and you mentioned the wealth transfer. The great wealth transfer is coming, but man, how much of that can we leverage for generational generosity and encourage the future generations to lean into? So that's a great conversation.
And we'll do bunching real quick, and then I'll let you wrap it
Okay.
up. So the idea of bunching, because this is like, so we've said all before this podcast is not for the development persons, but this is definitely a development person thing. So the only people out there talking about bunching are development people and maybe some tax accountants. And the whole idea of bunching is because, so what you can deduct from a federal income tax deduction, those numbers are bigger now for the average person. So a lot of folks that were itemizing a few years back aren't now.
Yep.
And so one of the ideas with bunching is I'll make a bigger gift to charity, probably into my donor advised fund in 1 year, and then I won't the next year, and that way I've secured the donation because I gave more to actually get past the standard deduction. Right?
Yes. Yep.
And then, so that bunched it together. I basically took 2 years of giving and bunched it into one.
Yeah.
And then I distributed it out as if it would have been distributed over the course of the 2 years.
Yep.
And then, is there anything else? I mean, that's kind of the idea, right?
Yeah. I mean, that allows
I didn't
you
even let you answer. I just told you what the answer is.
Well,
Okay.
well
there we
done.
go.
Yeah. It just allows you to get the itemized deduction 1 year and then take the higher standard deduction the next year and take advantage of the tax code the way it's written
we
right
can.
now. So,
And I think I'm sure with you, my experiences is the taxes are relevant, but they're not. They really aren't the driving factor. But this is one of those things we can do that at least lets us leverage that.
Yeah. Yeah, it just, again, it comes back to the stewardship conversation. So anytime we can take the code and the incentives in the code and say, great, let's be a good steward with the opportunities we've been given, and let's leverage as much of the social capital as possible for kingdom impact instead of letting it go to the tax bucket. Wherever we can make those decisions, great, let's make wise decisions. So
Right. So instead of,
Yeah.
there's so many things that could be said about the government and taxes.
So
and we're
real
not going to go there.
to kind of
Discipline right
bring
here.
this all down here, to simplify it, real quick summary through this, right? A donor advised fund is a tool to help you with timing. For example, you can help, whether it's again bunching to make the most of tax incentives for charitable giving, or to, if you get a bunch of money in December and you want to give it, but you don't know where to give it yet. It's a tool to help you time
anytime.
your giving, right? Or down the road for any time. Yes. It also simplifies things. You can get down to, you have one charity you give to, one tax receipt every year. And it kind of helps make things work, but it also simplifies in the form of, can help you make more complicated donations easier, whether it's taxes or other assets as well. You can kind of work with the experts at a donor advised fund to handle that. A lot of them also come with kind of advisors to help you think through all of those things as well. I know, like at NCF, educational resources to help you think through all the implications and the most strategic ways to give to charity. And then also just kind of that one quick caveat, be careful what donor advised fund you choose, because it is a gift. They have control of the funds, but they give you the privilege to ask them to consider sending it somewhere. It's probably the safest way to say that. And ultimately have rules and things to help you do that. But just to kind of keep that in mind as you research these opportunities. Again, that's one of the reasons why we have Chris here from the National Christian Foundation, is we're a big fan of them. So as we kind of wrap things up here, again, thank you for hanging out with us in the Giving Room. Thank you, Chris, for being part of it today. And again, if you have any questions at all about this, again, you can learn more. You can search for the National Christian Foundation. We'll have the link to them in the description here. But also you can go to the givingroompodcast.com for more information there. But again, we're thrilled to have you. Thanks for hanging out with you, and we'll see you next time in the Giving Room.
The Giving Room podcast is brought to you by Giving Design LLC, where we help ministries and their donors utilize planned giving to change the world. Go to givingdesign.com to learn more. As always, a huge thank you to River Radio Ministries for sponsoring and producing this podcast. Go to riverradio.com to listen or learn more.